What's up, traders? It's your girl Kaya Trades, and I'm back at it again with another YouTube video. Today is a very special video. I want to talk to you guys about backtesting. Okay, the way that you can get yourself out of a funk from your trading is to backtest, build the pattern recognition in your brain, practice your trade, practice your setup to build confidence. Let's go ahead and hop onto the charts and get the video started. Alrighty guys, the first order of business when we are starting to backtest is we are going to press our replay button. If you do not have the account that allows you to replay, you'll have to purchase the higher tier up to allow you to be able to use the replay button to backtest. Alrighty, and then when we're backtesting, we want to make sure that we go to the exact time that we would trade on a normal day coming to the charts. So let's say we backtest for yesterday. Usually I go a week out, but I'm just going to demonstrate this for you guys today. Today was Friday the 29th, so we're going to go back to Thursday the 28th. I'm going to start it around 7:40 in the morning. And then all we're going to do, guys, is basically go over the exact same steps that we would go as we come to the markets on a regular day. So you guys know my strategy. I look for supply and demand. So I'm going to go ahead and put that on the screen because we're going to walk through that as we go through our back testing. First things first, I'm always going to start with a 4-hour time frame. I am a day trader, intraday trader, so I'm not going to be doing too much on the daily time frame. Not really. So I'm going to anchor this actually. Boom. Alrighty, so as we can see, market is in a bullish trend. We have been going higher and higher and higher. If I point out my lows and my highs, we are actually possibly getting ready for a pullback. Let's go ahead and mark that so we can kind of see that a little bit more clear. We've had a higher high than this low. We've had a higher low than this high. We've had a higher high than this high. We've had a higher high than this high. We kind of came back for this low, but then we still were able to break structure. We broke this high, creating a new high. So we could be potentially heading for a pullback. Okay, so my direction could be bearish for today. We don't know 100% yet. Okay. And so we're going to delete that and go down to the 1 hour and let's see what we can find on the charts. I trade the market open around 9:30 a.m. So we're going to put our marker at 9 a.m. and this is our 1 hour time frame. As we can see, price is still pushing higher and then we start coming down to almost breaking lows, but price is starting to kind of make a stair-step pattern to the downside. We were bullish and now we could be potentially dropping. So my bias on that bearish trend is really coming to fruition. Here we go. All right, we have a break of structure there. We have another strong break of structure here. Let's see if we can get another break of structure to the downside. We can either break here or even, let's get to almost 9:30 before we even get started. Because again, I don't trade anything other than 9:30 open. All right, so as we zoomed in on our 1 hour, we can, on that 5 minute actually, we can actually see the downtrend starting to take place a little bit better. Just more detailed story from the higher time frame, and it's looking like the trend is going bearish. So I still got my bearish bias. I'm going to zoom in right here and get a little bit closer to market open. I typically come to the charts around 8:50 in the morning. And as we can see, we started making a high to the upside. Wow. So price came down. We weren't able to make this low, but then we began to break structure to the upside. So now my bias is coming from bearish to a bullish bias. And let's see how this kind of plays out today. Okay, around 8:35. Cool. I may or may not be around the charts then, but we do still have that break of structure. So I'm kind of waiting for a break of structure to happen here. Let's see. We definitely could mark out this zone right here. For our demand zone, I'm going to mark that out so you guys can see that. Awesome. And so we're waiting for price to come back down into this 5-minute demand before we get the breakup candle to take it higher. So I'm going to click until we get to market open. Okay, market open is at 9:30 Eastern Standard Time. It's right off in this area. Okay, and price has made a new high for me to look for price to break. And boom. Now we're waiting for that to break because again, price is broken structure to the upside. Now the trend is possibly changing. All right, so here is the 9:30 candle. We have swept liquidity at the high. Okay, as price is printing, I am taking note of that. I'm going to mark this line as liquidity sweep. Let's see if it'll come back down and tap our zone. Okay, we kind of got a tap right here. Almost perfectly. So my goal right now is to wait and see if price will break this high and give me an opportunity to get into the market. If it doesn't, we'll wait. Okay, so let's see what happens. We press the next button. Price has shot down a little bit further into our zone, but it hasn't closed below it. So I'm just gonna adjust my tool here. Alrighty, if we get a break above, I will look for a buy. All right, we shot through this level, but we still did not close underneath it, so it's still a valid zone for me. And then sure enough, after our tap of our zone, we got a break of candle for our entry. I'm gonna go ahead and place my entry stick right there. And I'm actually gonna use this entire wick for this candle. So I'm gonna use my tool to come all the way down here to calculate up for my 1 to 2. And at this time, I would already be in the trade, but I'm going to mark it out here anyways. A buy limit there. Boom. With a sell stop here. Okay, maybe that's tripping. Usually if it's acting kind of funny, because you know, it's not actual data, it's data that already happened. But you guys get it. We're going to enter the trade once it broke that high. It broke that high and it came back down low. So we're going to see this play out. Oh, wow. That was really fast. Did you guys see that? Price like shot to TP. Okay, let's go back. Let's go back so we can see it nice and clear. We waited for that break of candle entry. We got that break of candle entry, guys. It was beautiful and it was clear as day. All right, so we played. Okay. We got that break of candle entry. Price closed right here. And we're going to play it one more time. And we're waiting, we're in profits. Once we hit 1 to 1, we're moving our stop loss to break even, just like right here. And then sure enough, after that candle, TP1, even TP3 was smashed. I shoot typically for TP2 because the higher your risk reward is, the less likely it is to go ahead and get that. So I typically stick to 1 to 2s, possibly 1 to 1s. Even if we would have had the 1 to 1 and moved our stop loss to break even, it never would have stopped us out at break even. Price came down a little bit and then shot up. So now I'm going to go back to my journal. And I believe this is the day I pulled it up. Yes, so this is Thursday the 28th. Now I'm going to compare. Okay, did I take the same trade? On this one, I had a 1 hour zone marked up, even with our trade here. But it looks like the same trade still played out, and I even used a minor breakup structure. So even going through my trade, I am now going to take a note and say in my journal, so I even wrote right here, minor breakup structure demand play. I'm going to go back, take a picture of my trade here, copy image. I'm going to add it I'm going to add that this is my back testing. Okay. So with my back testing note, the only things I'm going to put is, did I do the same thing that I did? My trade was slightly different than my actual trade. I used a previous demand zone. But I was able to identify the sweep of liquidity. Well, the first thing is I was able to identify the trend change, the sweep of liquidity, and the hold of a demand zone. During my actual trading, I did not use a previous demand zone, but when price held that level, I took the minor breakup structure setup, which we actually took a minor breakup setup today as well, which is amazing. I've been really identifying those in the market as they happen, but obviously I'm going just a little bit quicker through this today. But I just wanted to give you guys a glimpse of what your backtesting can look like and why it's so important. The fact that I was able to identify the pattern, the same pattern as I did on my backtesting as my actual trading day, banger, right? So our goal is to try to get them as close as possible, if not exactly the same, following the same step and process. Had I been staying like, oh my gosh, no, it's a bearish trend, even though I didn't get this breakout structure to the downside to continue, then I would have been out of luck. I would have been trying to take, oh yeah, the sells, and then maybe I wasn't able to identify that in the live markets, or maybe I wasn't able to identify that in the back testing. But I know, and I'm familiarizing myself with my pattern for my supply and demand setup. I just simply I delete this right here. What I used for this one was once we came down into, I think, the 1 hour zone, let's double check, the 1 hour zone, and we broke a high right here. I would consider this a minor breakup structure. We had a little pullback, and then that candle closed above this black candle. So price came down here, made a higher low, made a higher high, made a higher low. We were anticipating price to come back higher. Once we were able to close above this black candle, I went ahead and made that candle a zone. This is the trade I took actually. I went ahead and made this the zone. So if I do replay, boom, one more over. If this was the actual zone, the trade I took was, okay, let's see if we can get a tap of the zone. We did get a tap. Let's see if we can get a break of candle. Enter here and shoot up for the 1 to 2. 1 to 2, still following my steps, waiting for a break of candle entry. Let's see if we can get that entry. Let's press play. We got that break of candle entry, and sure enough, our 1 to 2 was smashed. So that's kind of what it looks like when I actually took the trade during the day. Obviously, price was moving a lot slower, but even just me going back over it, I was still able to capitalize on this movement because I was able to identify, okay, no, the trend is changing right here, so I need to be on the lookout. Okay, we got the liquidity sweep. That could be a trap. Okay, we came down and we didn't make a new low. Price could still be wanting to push higher. staying with the trend. So I just wanted to hop on here and show you guys how I backtest, why I think it's important. Again, it's so important for you to familiarize yourself with your trading strategy, with your pattern, with the patterns that you trade for your strategy, and to just really build confidence in your strategy. If your strategy, what you actually take and what you backtest is coming out completely different, you have a lot of uncertainty and you do not know what trade you're actually looking for when you come to the markets. Our goals as traders is to come to the market, know what we're looking for, take our setup and only our setup, and if our setup doesn't present, we don't take a trade. Simple as that. If this didn't give me anything, and on the actual day it didn't give me anything and I didn't take my trade, great, because I want to follow my system and my process. Hope you guys liked this video. If you did, comment something that you've learned, comment where you're from, comment how long you've been trading. I want to get to know you guys a little bit better. And let me know if this video helps and what videos you guys want to see next. All right, I will catch you guys in the next one.